Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I'm going to share with you guys 5 companies that I genuinely like, that I consider foundational stocks for my portfolio. They've been in the portfolio for quite some time. I'll share with you guys at the end of the video how much of these companies that I own, how long they've had them in my portfolio and so on. But first I'm going to give you the names of the companies, give you a bit of the financials and so on, and we'll take it from there, inshallah. If you're enjoying this type of content, please join us on the Patreon account where you get access to a lot of things, including the Discord and so on. And of course, as always, if you can like the video, that will be absolutely appreciated. So just to have a quick look in terms of the markets, what's happening today, as you can see, majority of the companies are green. Tesla is still up another 6% or whatever. Yeah, I think President Trump is definitely helping Elon Musk with whatever's going on. So it will be interesting to see what happens with Tesla in the near future. But I think it's up, I can't remember how much, but it's up so much just in the last, 5 to 10 trading days. The semis are not doing well today. There are couple of other companies like AbbVie. We talked about this actually in one of the recent videos. This one is down about 12% because they have a schizophrenia drug that they were expecting. I think it was phase 2 that didn't go well, and there was a bit of a setback. So for that reason, the stock went down 12%. Now, what I'm hearing is it looks like the revenue coming from this basically drug would have added about $2 billion in 4 years from now. So it's not something immediate. So what will be interesting is to see how it goes from now on and what happens to the stock. And just generally, just looking at the earnings expectation is this week, there's not a lot of companies that I own that are reporting, but Home Depot is reporting tomorrow morning. That's Tuesday, before the market opens. So it'll be interesting to see what they say. Again, there's a company that I own in my portfolio. So it'll be interesting to see what they say in terms of overall market and what they see. And if it is quite expensive, I believe right now. So I will be I'll keep an eye on it, inshallah. Rockwell, no, that's not automation, that's another company. There's a few other companies like Cisco's and so basically others that are reporting this week, but Applied Materials, the one I will be interested in, and basically will be looking to see what they say generally. But yeah, Alibaba's and other companies are reporting, so it will be interesting overall to see what happens. But it's not a week where we expect, all the big boys have already reported. So I don't think it's going to make a huge difference in terms of where we are in the stock market and so on. Now, let's talk about these 5 companies that I mentioned at the beginning. Now, one of the things I want to talk about is the fact that some of these companies, I call them foundational stocks because each portfolio should have at least 5 to 10 companies. That's if you are basically genuinely buying just individual stocks. You should have at least 5 or more stocks that are foundational stocks, which means these are your reliable companies, go-to companies that you've actually, the business inside out. You invest and you just buy and leave them alone and let them grow. And that's exactly what I did with all of these companies. And I will tell you at the end how long I've had some of these companies, okay? Now, exactly what we're looking for is exactly what we always look for. We will also check out Morningstar valuations. Some of these companies, just to let you know, seem very expensive right now. Let's get started and talk about the first one, and that is Visa. Now, I'm not going to talk about the fact that Visa is a Sharia compliant company, because it is, and I always do. And no, I don't think people listen. They see Visa on the list and all of a sudden, oh, how dare you invest in this company. Anyway, you can do whatever you want to do, but this company does not deal with the riba side of things. They are a technology company that makes facilitates those transactions that happen. Okay, they don't deal with the actual cards and what goes in, how much people spend and get basically cut from that. None of that. They facilitate those transactions, and then of course they charge fees. That's it. So 584 billion market cap right now, wide economic mode. Prices right now over $310 per share, which is quite a lot, because I think I started buying when it was 200 something. So I'll show you at the end. Okay, dividend yield right now is 0.8%. Again, I'm not in it for the dividend, I'm in it for the growth. So the 5-year growth rate, we're looking at about 16%, and the payout ratio only 21%. Now, the 15 years of increase in that dividend, you get $2.36, and it's A rated by Seeking Alpha, which is basically the highest you can get is A+, right? The 5-year growth rate of a revenue side of things, we're looking about 9%, and the EPS, we're looking about 12%. Profit margin, return on equity, return on invested capital, absolutely wonderful. Free cash flow of almost $19 billion. Free cash flow yield of 3%. The total return in the last 10 years is 17.6%, so almost 18%. Revenue growth for expectations for next year is about 10%. EPS is about 11%. 13% premium right now, $272 per share. Now, if we go here and check out Wall Street, as you can see, this stock year to date is actually up about 19%, for the 1 year 26%, and the last 6 months about 10%. And as you can see here, it has a forward PE of 27. So that's actually, but I think it's slightly lower than where it has been over the last whatever years. So the 5-year average, okay, for this, if you're looking for non-gap, right, or even gap, if you're looking for gap, is actually slightly lower. So PE, forward PE, the non-gap PE is about 33. And then if we look at the trailing 12 months for gap as well, we're looking at about 35. So it's slightly lower than where it has been. And maybe that's why Wall Street is slightly bullish, because you've got 18 strong buys, 11 buys, 9 holds, and when you look at the price, there's about 3% upside from where we are, which is $319 per share. Okay, that's the first company. The next one is S&P Global. This is probably one of my favorite companies. I've always said this. I wish I bought more at the time when I was buying. It seemed undervalued, but right now, according to Morningstar, it's actually fairly valued. It has come down quite a bit. In fact, has it come down? Let me just check. Okay, for 1 year, it's 31% up. Year to date is about 15%. Last 6 months, about 19% almost. Just for this month is about 2% down. So no, it has not come down at all. So it has a wide economic mode, currently $508 per share, dividend yield of 0.7. Again, another one that is not that doesn't have a huge yield right now. But of course, the growth side of it, so payout ratio is very low, and the 5-year growth rate for that dividend is 10%. The 50 years of increase in that dividend, so they are a dividend king right now. $3.64 is what you get. Another A-rated dividend safety. 5-year growth rate in terms of revenue, in terms of EPS, 16%, 4%. Profit margin, return on equity, return on invested capital, really good. $5.1 billion of free cash flow right now. The free cash flow yield is 3%. The total return in the last 10 years, we're looking at about 19%. And the revenue growth estimate for next year is 6%. And the EPS growth for the following, basically, year, for the same year, okay, is 10%, which is nice. So 6% and 10%. Fairly value right now, $470 per share. If we go back here and check what Wall Street is saying, strong buys, okay, 13, buys, 7, and hold, one sell. And that is about 12% upside from where we are, $574 per share, which is about 13% upside from where we are. So there you go. That's the second company. And I really like the company. And I will show you exactly how much I have invested in this company, or how much I'm up or down, whatever. Procter & Gamble is the next one. This is one of those low growers company, steady Eddie, goes up maybe 1% every couple of whatever months or so. So it's one of those foundational stocks. It stabilizes my entire portfolio because of that slow growth and lower beta. Some of these companies that physically have a higher beta, that means they fluctuate a lot, going up and down. This one doesn't, and I think the election day was the only time I've seen it go down about, I think it was 2-something%, 3%, whatever it was. So currently it has almost a 400 billion market cap. It's a huge company. It has wide economic moat, $166 per share right now. Dividend yield of 2.4%, which is really nice. The 5-year, basically, the payout ratio is like 58% right now. Not bad at all. The 5-year growth rate of 6%. Dividend streak of 68 years of increasing that dividend. So they are a dividend king, and they're past that stage. The annual payout right now is $4. Dividend safety of B+. The 5-year growth rate and the revenue for the revenue is basically 4%. The 5-year growth rate for the EPS is 3%. Profit margin, return equity, return invested capital, really, really good. $15.8 billion of free cash flow right now. The free cash flow yield is only 4%. Total return, I say only, is good, is better than these two. Total return the last 10 years is 8%. Growth estimate for the revenue side of it for next year is 4%. EPS is 7%, 17% premium, $143 per share is where they think the price should be. Now looking at the year-to-date price, so it's about 14% up, and looking about 9% when it comes for the 1 year. For the last 6 months is almost a flat, which is basically interesting. And for the 1 month is actually a little bit down. Wall Street is actually saying it's a buy currently, about 19 strong buys, 4 buys, 11 holds, and we've got one sell. So 11 strong buys, which is interesting, and about 6% upside. $178 per share is where they think the price should be. Another really great company, like I said at the beginning. Home Depot is the next one, is reporting today, like I said early, so it'll be interesting to see what they say. The stock seems very expensive. It has been expensive based on Morningstar valuation from, I don't know, for the last 3 years and also. So it'll be interesting to see what happens tomorrow. 403 billion market cap right now, wide economic moat. Again, all the companies that we're going to talk about today have a wide economic moat. Price right now is $409 per share. Dividend yield, we're looking at 2.2%, which is quite nice as well. The payout ratio 59%. Anything below 60%, I'm fine with it. Even lower than that will be even better. So these I actually really like. These two is kind of borderline, which is absolutely fine with me. The 5-year growth rate, we're looking at about 12%, which is really good. Dividend streak of 14 years. Payout ratio $9 per share right now. That's what you will get. But it's rated A+, which is the highest you can get. Revenue growth for the last 5 years and EPS are both really good, 7%, 8%. Profit margin, return equity, and return invested capital, really good as well. $16.7 billion of free cash flow. Free cash flow yield of 4%. Total return the last 10 years, we're looking at about 17%, which is really nice. Revenue growth for the last, basically next year, is 4%. EPS is 5%. 44%, like I said at the beginning, premium right now, $282 per share. And looking at Seeking Alpha, as you can see, for the 1 year is 42% up. For the basically year to date, it's about 18% up. Last 6 months, we're looking at about 20%. By the way, we're going to back test these companies, okay, all 5 of them, for the last 20 years. So if you had invested basically 20 years ago on these companies, where would you be right now? I'm going to show you exactly that. I'm going to use a back tested. Okay, so right now, as you can see, it's about P is about 27 forward PE, that is. And when we look at the Wall Street expectations, it's about 20 strong buys, 6 buys, 12 buy holds, and 2 strong sells. It is a buy. And as you can see here, it's flat when it comes $412 per share. Right now, it's closer to that. So it is exactly where they expected the company to be. And the final company I'm going to talk about today, you probably knew this one, is Broadcom. Broadcom is probably one of my all-time favorite companies. It's up a lot. I'll show you exactly how much up. It seems very expensive right now, 18% premium right now, $155 per share is where they think the price should be. It's becoming a huge company, 857 billion market cap. So it's heading towards that, all the big boys, because of course AI and everything else that's happening. Current price is $177 per share. After the split, I think it went down to 100, I think it was, or 120. Since then, it's gone up quite a bit. Dividend yield of 1.2. I was buying this company when back in the days when it was really cheap, almost a 3% dividend yield. So that means the price has gone up so much. The dividend yield, of course, went the opposite direction. The payout ratio now 46%. The 5-year growth rate of 15%. The dividend streak of 13 years of increasing that dividend. You get $2 and basically 12 cents. A minus is the dividend safety rating from Seeking Alpha. In terms of revenue, in terms of EPS, absolutely fine, nothing to worry about. Profit margin, return equity, return invested capital is decent, it's not great. Free cash flow right now, we're looking at about over $18 billion, 2% when it comes to the free cash flow yield right now, 37% total return in the last 10 years, 17 expected to grow the earnings, the revenue 17%, 28% for the EPS for the next year, 18% premium, like I said, $155 per share is where they think the price should be. Now looking at Seeking Alpha, it's actually strong buy. So let's have a look at for 1 year, 87%, a year to date 50, let's call it 59%. 6 months 32%. For the 1 month is actually flat, 37% when it comes to the forward PE. That's probably the highest it's ever been. Look, this is what I was buying when it was around about in 20 PE. Right now that is doubled since then, because the growth expectation for this company is absolutely ridiculous. And if we look at the strong buys, what are we seeing? 29 strong buys, 8 buys, 5 holds, no sales whatsoever, and we are currently looking at $193 per share. That's about 20% upside from where we are, but I do kind of agree with the Morningstar valuation. I will not trust Wall Street on this one because it has gone up so much. I will actually be patient. Okay, that's what I will do definitely if I were you. Now looking at the how they performed against the S&P 500 over the last 5 years, as you can see, the S&P 500 is about 93%, Procter & Gamble about 59%, again S&P Global we're looking about 107%, Home Depot 97%, almost the same as the S&P 500. Look at this, check this out. Broadcom 568% over the last basically 5 years, and Visa we're looking at about 79%. Now if we look at the last 10 years again, so 152 for this one, the S&P 500 193, so underperformed to the S&P 500. But like I said to you, that's a steady eddy kind of what you get, and then you've got these high flying companies to kind of compensate for this one here. So that's why it is important to have a balanced portfolio. If you own this one, you know these basically companies will be flying. Even Home Depot of all companies, 427% basically over the last 10 years, and then 500% for this one, and you get about 152. Yes, of course it has underperformed the S&P 500, but you've got these companies to compensate, like I said at the beginning. Now let's go back and retest this. So 2004 to 2024, so we're doing basically 20-year test. We're starting with $10,000 or pounds, whatever you want to call it. We're basically putting a fixed contribution of £1,000 or dollars every single month, adjusted for inflation, monthly that is, by the way. And these are the 4 companies. Of course, realistically, you will not do 20% each company. You'll probably have a lot more potential, some ETFs and so on. But let's go with 20%. If we scroll down, what you will see here is that initial investment, and then in whatever you contribute right now, after 20 years, after making the contribution of 1,000 every single month for the last 20 years, you would have right now $2.5 million or 2.5 million pounds or whatever it is, which is absolutely amazing. And that shows you the compounding, basically how powerful compounding is, and being consistent and consistently investing in these companies. So now again, like I've always said to you guys, just do your research, find out more about these companies, learn about these things. Okay, just quickly show you before we close the video. As you can see, Broadcom, I actually own this company. I've had it for quite some time. This is my average right now, and if this thing allows me, I'm gonna try and show you. I think I started investing in 2020, but I think it might take a while to load these things. So 2020 is up about 15. There we go. When is the date? Where is the date? Here we go. 2020 is the first time actually investing in that one. And yeah, since then I've had it in the portfolio. I've not sold. Basically, I've sold it, trimmed it a little bit here and there. S&P Global is the next one. So if we click the history and scroll all the way down, just to be honest and transparent with you guys. So there we go. 2021 is when I bought this company. So I've had it for a few years. The next one is Visa. Let's find out how long I've had Visa actually, because I don't know. And again, it can be September 2023. That's just the dividends. What's happened there? There we go. That's the better. 2020. June of 2020 is the first time I bought. Again, this is why I keep saying to you guys, it's a foundational stocks for me, because I've had them for a while, left them alone, added to whenever I see an opportunity, and I will continue doing that inshallah in the long run. Again, another one that I bought in 2020. So I'm not really basically selling these companies anytime soon. I'm going to hold on to them for as long as I can. The final company is Procter & Gamble. This is probably one of the older ones that I've actually had in the portfolio. So let's see when I started buying. Okay, the 8th of July 2020 as well. So majority of the companies actually been in the portfolio for the last 4 years and plus. So if you enjoy this type of content, please do join us on the Patreon account. I've always been honest and transparent with you guys and showed you exactly what I'm doing. Now to finish things off, the Sharia compliance side of things, okay, you can pause the video, have a look at that. Have a wonderful day. Assalamu Alaikum.